Hi, my name is Tony, and in today's video we'll be taking a look at the crude oil futures, specifically the June 2020 contract again. Before I begin this video, I just want to say a few of my previous videos got a little bit of traction. I received a bit of feedback, some good, some bad, and I just want to thank everybody that watches my videos and leaves feedback. I'll do my best to improve video production quality for future videos to make my analysis more engaging. So thank you very much. And without further ado, I'll be taking a look at front-month crude oil futures for June 2020, the nearest contract to expiry. This oil actually gets delivered next Tuesday, so today's Thursday night as a recording. So this contract will expire very soon. Whoever's holding on to the long positions will have to take custody of oil. Now, in my last video, I said that I expected oil to fall in this week simply due to the fact that people don't want to take physical delivery of oil. It costs a lot of money to store it, and it's still kind of up in the air as to if we have enough storage for this coming delivery. But as it would appear, I think the markets answered that question with a very resounding yes, since oil prices are still trading very much higher. Saudi Arabia, other OPEC members, and United States producers all said that they're going to be cutting oil production. And also, there's just simply more oil demand these days as a lot of states are opening non-essential businesses. And as a result of that, we do see that oil has rallied extremely well. This contract did trade from around the high $6 range all the way up to $27 a barrel. If you manage to hold on this entire run, I'm guessing you're doing pretty well for yourself financially. Now, I think what's very interesting to look at here is that there is just about no spread anymore between the June and July contract, and that's essentially the market saying that storage will not be a problem any further. And as storage was the main reason for us going negative in May, since there was simply no place to put the oil, and because there's a lot of environmental regulations on how to deal with oil, most people can't exactly take custody of it for a very cheap price, and we're willing to, sell to somebody else and pay them to hold on to it instead. We don't see the same problem anymore with the June and the July contracts. I think what will happen in the near future is that oil prices should continue to rebound. I know that they seem overbought on a short-term perspective, and I don't know if this is the best time to enter, but what I do know is that in the long run, I would expect oil prices to recover, at the very least, back to where we were before coronavirus was a big problem, perhaps at the $40, $50 range. And I don't know if that's going to be for the extreme short term, but it will be definitely something I'll be looking at in the next year or so. The news that we've been seeing this week that caused oil to rally 10% yesterday was that, a lot of agencies see that oil has been dropping in the past, but more recently, oil production has been cut by a lot of OPEC members and non-OPEC members. As a result, because there's no longer a supply-demand mismatch, the prices have gone up since there's not so many sellers. A lot of the large oil ETFs, such as the United States Oil Fund, have sold off their June contract earlier to prevent their fund from holding on to potentially negative futures contracts, and that was responsible for this drop here. But now that we're moving higher, nobody's really selling oil anymore, and people are just buying. Again, there's not so much supply, and there's a lot more demand. I don't think oil is going to be negative anytime in the near future, perhaps the next 10, 20 years, unless we see something else hit us. So my forecast is simply that this contract, again, it seems a little bit overbought. I would imagine it gets sold off a little bit on the technical perspective here. But, I'd be very surprised to see this go below $24, where it seems as though there's a little bit of support. If I can just draw a support level. Right there seems to be a pretty good line of support. So I believe oil, if it were to hit this level, I think oil may just consolidate. And in the long run, I believe it goes higher. If we look at the further dated contracts, the ones expiring about a year from now, there is still a $10, well, now there's about a $6 spread, but the spread is much reduced from where it was about even a week ago when I made my first video on crude oil. There was a $9 gap between the June 2020 and June 2021 as of Sunday evening, and as of now there's essentially only a $6 gap. And again, what the difference is saying is that the price of oil today isn't too different from the price of oil in the future, and perhaps in the short term we won't have any more supply issues or storage issues. What I would do right now is I would go long on long-term oil. I wouldn't be buying short-term contracts at the moment, especially not the June 2021, on the basis that it's about to expire and you have to take custody of the oil if you're holding on to it by the end of Tuesday's trading. But for the long term, I do believe oil is going to be very, very bullish, and we could see a good recovery. Remember, oil has a lot of applications, and what we've been seeing so far is the result of overproduction and and a lack of demand, two problems which are very much basically disappearing in the short term as coronavirus starts to no longer be a problem. I would imagine that oil goes higher and higher. With all that being said, thank you very much for watching my video on crude oil futures, and I wish you best of luck in your trading. Take care.